Hi gang, Jeff Greenblatt here, and today we are going to do a mini webinar on price and time squaring. It's adapted from other webinars that I've done at national conventions and elsewhere. I think this is a good all-around teaching, not only for my posse that's been studying this stuff for years, but you new people as well, because what we're going to discuss today are the natural price and time algorithms that are appearing in the market. And this is for intraday swing and position traders. And towards the end, we're going to start on an introduction into the SMC tactics, which is smart money concepts, which is how the smart money and the market makers, how they work the market. And there are tons and tons of videos on SMC tactics, which I suggest you watch some of them. But what you will not find in any of them, and what I find very confusing in the SMC community, is the fact that none of them do proper price and time squaring. But when you put the two together, it's very powerful. And so here's our little disclaimer. Basically, what we're saying is that commodity futures, forex, and stock trading is risky, not suitable for everyone who views this content. This work is for educational purposes only. The contents here are not considered to be an offer to buy or sell any security, stock, or futures contract, with understanding the author's agents, distributors are not engaged in rendering any legal, accounting, or professional services. Viewing or purchasing of any of this content constitutes you agree with this notice and exempts the author's agents, distributors from any liability or litigation. You know I have to do that. Basically, this is for educational purposes, and I'm showing you by observation what the market does, and it's up to you to figure out what to do with it. But believe me, I'm showing you stuff based on a long period of time that is more accurate and precise than anybody imagines, because this stuff's been hiding in plain view of everyone for years, and only a handful of people have ever figured this out. So let's get rolling here. What is Kairos? It is the supreme moment. It's the time that the trader has an edge in a zero-sum market. The pattern does get hot. Unexplained variation is very low. An unexplained variation is what is coming against you that can and will hurt you. Now, trading, as you know, is a zero-sum game. For every winner, there's a loser. Most importantly, winners do things differently than others. They think through strategy. They plan their trading and economic activity, financial activity ahead of time, and they don't use lagging indicators. So what is price and time squaring? Gann stated that when price and time square out, the pattern can change direction, which gives you an edge. Our job is to learn natural algorithm tendencies of the market to give us an edge against the people on the other side of the trade. And we must learn to identify when price and time line up, as market patterns tend to repeat over and over. Now, I've shown you this chart in the very first video I did a couple of months ago on the prototype. It's a gold video, and I was just showing this as an introduction, so let's get into this. By this point in time, I had already had success with smaller time frames. This is an hourly time frame. It was done in 2016 in my old subscriber-based newsletter, which I've retired. So right now, if you want to find a weekly newsletter from me, you go to Substack. It usually comes out on Sunday night. At this moment, it's free, okay? But it shows you a lot of what we're doing right now. But back in the day, I looked at this and I go, Whoa, 36 hours pullback to a price of 1236.9. And let me make an interjection here because the latest manual that I just did a couple of weeks back called Deeper Mysteries of the Market Revealed talks about all this circling stuff, all these 36 multiples. The market responds in multiples of 36, and it's been hiding in plain view for years, and now I see it all over the place. Like, check this out. 36 hours, 1236. Stuff like this has been hiding in plain view for years and years. Now, look what happened. The next day and the next 2 days, I looked at this, saw how this took off, and I was hooked for good. Now, let me just say, because I've already given you a disclaimer, I need you folks to think about trading and investing and being involved with markets as an exercise in probability. You have to know probability thinking, and what that means is these setups do not always work. They work a good percentage of the time, but under the right market conditions, this is the catalyst. 36, time, price. Simple Dow futures chart. 1 minute. I told you I had already had success on these charts. Well, check this out. What's not seen on this pattern is what came before it, and this 157-point drop is a 36% retracement. There's that 36 again. But the reason this is here is because we have a 49-point drop. It terminates on 38 minutes at 48 minutes after the hour. There's price and time. Now this one's a little bit more complicated. It comes in steps. The high 34,500, 500. Next high 466. Difference is 34 points. This is a 15-minute time frame. So you got 34 points, 34, 35 bars, and then a 300-point breakdown. Pretty amazing, isn't it? Now on this chart, just follow the arrow. We're starting over here at 4 minutes after the hour. Over here, we're 46 minutes after the hour. That's 42 minutes. And guess what? From 697 to 656, it's 41 points. This is at 46 minutes after the hour, and it's a 47% retracement. So it all lines up over here, and here's where the Dow futures takes off. This is a 66-point move in less than a half hour. These square outs do set up the most important moves of the sequence, and it requires a lot of discipline and a lot of patience to track these bars and understand what's happening and be able to engage when you need to. It takes practice. You will not learn how to do this overnight. One of the early revelations that I had is concerning retracement technology. Now, if you're a Fibonacci trader, if you're a Elliott wave person, Gartley, you're knowing 61, 50, 38%, and 78% retracements. I'm here to tell you that we're going to shred that idea right in front of you, and almost any number can be a retracement as it embeds in the pattern. And not only that, we're also looking at inverse relationships where retracements are always the smaller leg in relation to the bigger leg, but we're also looking at the bigger leg in relation to the smaller leg. This is nonlinear math, gang, and so the market doesn't operate in a box. And this applies to intraday swing and position trading and investing. This is one of these, give you a great example. A couple years back, we had a sequence in Bitcoin where it found a low, it bounced 12,990 points, retested that low, and it was a 91% retracement. And you'll see on my charts that I call out all these different percentages and numbers. This is basically the retracement value and the inverse of the retracement based on here to here. And this one's a 58% retracement, which is basically based on something back here. Not important for right now. The important thing for right now is that you had a bounce that ended in 90, and the retracement value was steep at 91%. This chart, 4-minute chart, 181 points up, 570 to 751. By itself, that doesn't mean anything, but on the next sequence, which is the secondary high, it's an 81% retracement. Okay? Burn that in your brain. Here's the thing. If you're a Fibonacci or an Elliott wave trader and you're used to looking at 38% retracements, 61% retracements, etc., when you look at a pattern that has an 81% retracement, none of you are going to know what to do with that because nobody's ever taught you that there is even such a thing as an 81% retracement. But this is where the opportunity is. And it manifests in different ways. On a intraday clock, which this is a 1 minute, but the intraday clock, this from this high to here would be 38 bars. And the retracement value from the bigger to the smaller is 1.38 over 72%. So the match is the 138 and the 38 degrees. And then you get a nice drop. Here's one of these two-step deals. From 944 to 91, 47 points. That doesn't mean all that much by itself until we come to the realization that on the next pullback, it's 47 degrees. So you have 47 points, 47 degrees. And if we were to get into the SMC stuff right here, this, because this is a little discount zone buy block, that's where they bought. So this is working all in the right place. Right place, right time, takes off, nice move. Okay? It takes a lot of discipline and patience to let these things set up properly. Now this is a breakout and resolution of a flat pattern. It all happens over here because what we have is from 47 minutes after the hour to 5 minutes after the hour is 18 minutes. And from 514 to 496 is 18 points. That's where it breaks out. But see all the patience that is required to track this and wait until it does all the work. I mean, I've heard guys on the radio and different market pundits look at patterns and say, oh, it's got more work to do. Yeah, they're right. But what kind of work does it have to do? Not many people understand that. And you're looking at it. That's the work. It needed to complete its price and time relationships before it was able to break out of its consolidation. Now, the thing with ES and NQ is that the S&P 500 and the NASDAQ futures, each point is 4 ticks. So how does the price and time square out? By price on the points or by ticks, For instance, from 68.75 to 64 is 19 ticks, but this is 20 minutes. From 67.75 to 64, and that's 29.67.75 to 29.64, is 15 ticks, and it's 14 minutes. So that's how that works. And you can see how eventually it led to the move of the day. Bigger time frame, 30 minutes, bar count and retracement values. Okay, it's 47 bars, 48. You got the one margin of error, but the inverse of the retracement is 1.47. So it's all lining up right here. And here's what happened. It's roughly a 15-point drop, which was a fairly significant move for that particular day. But this is how it's set up. Now this one's pretty straightforward because it's a 72% retracement and it's 71 bars on a 30-minute. And this led to a very important move. This is probably, if it's not the move of the day, it's the move of the week. And you see exactly how it's set up. Now, I tend to really like this chart. And we go back and forth from 30-minute charts to 1-minute charts. Later on, I'll show you bigger time frames and everything in between. As it turns out, this particular move is 15.25 points up, which is 61 ticks, and it's 160 minutes. Pretty good, isn't it? Now, on this is a little variation on a 15-minute. High is 30.23, secondary is 30.22, and it's 22 bars. It's not a coincidence. And you could just see the rest of what happened to the action. It was the motive. It was the inspiration and motivation for a much bigger move. And here, it's 47 hours at a 48%, which led to that last part of the move, which is the best part of the move. And then I wrote a manual called How Patterns Terminate, which describes how the last leg of a move influences the entire pattern. And what I mean by that is if we take this last leg here, and this is 029 down to 940, it's 89 points. But if we take the whole pattern on the intraday clock, it's 90 degrees. So you've got price lining up with time on the last part of the move. And you'll see this a lot in all the different time frames. This is 19 minutes down. This is 19 points across. It all lines up here for a perfect square out. And this is the best that I can show you on a 1-minute chart of a square out. And this sort of thing happens all day long. You should know that. So I've already shown you what replication is. I call replication is the holy grail of the market because there's more good buy and sell signals coming from the same numbers repeating in new ways. Numbers do repeat over and over, such as range, retracement, time, percentage change as well. Need to get convicted when to buy pullbacks or sell bounces. Swing and position traders need to scale down to hourly 30-minute time frames, and these natural algorithms give you a very nice edge. For instance, 44 points up, right? 43 bars across. Leads to the move of the day. Now this is the same action on an hourly, I believe. Yeah, 44 and 43. Okay. Now check this out. 44 points up, 43 bars across on the smaller time frame because this is an hourly, right? I'm showing you the bigger perspective. But then it's 45 hours to here, and it gives you yet another great situation. Okay, so what we have here is 43 ticks, then the low to low, 43 ticks, then the low to low is 45 15-minute bars. Okay, 43, 45. We like a margin of error of 1, we accept 2. "30-minute has a 49% retracement, then the next low, well, here's 49%, right? Then the next low is 48 30-minute bars. Consolidates, takes off again. On this chart, we have a 77% retracement off the low, and then it goes and makes a full circle almost, and it's 77 degrees, 77 bars on the intraday. So you have 77% retracement value, 77 bars in terms of time and price. And so you could see the replication here. Oil is 35 30s across, 30-minute bars. Then the next leg is a 34% retracement back to the 35 30-minute pivot. And then it drops again. That's oil. "53 vibration leads to the big scalp. You've got a 353 point low. You've got a high at 53 minutes after the hour. And this is 52 minutes from the low. So it all works together. Oh yeah, by the way, I almost forgot to tell you that the high here is 53. On this chart, you got another 38 DG setup. It's 38 bars, and it hits at 137 points. Boom. Now, there's just a lot going on this chart, and you can see the continuation. I'm not going to get into all of this. You get the idea, but I just want you to see how you take an intraday chart and even a daily chart with all the different square outs, all the different readings, all this stuff going on the pattern. It's all there for you, but most people don't even know that this exists. So now that I've shown you a lot of that, we've got to talk about you winning the battle for your mind. That is really the most important part of this thing, because I can show, this is why we need disclaimers, because I can show you whatever I can show you, and it's not me, it's not my technology. This is just what the market's doing. But you have to train your mind to bring yourself up to speed to be able to deal with it. Other experts have said that deliberate practice, the gateway to mastery, is the 10,000 hour rule. Yeah, that's true. But if we're going to do 10,000 hours, we can't do 1,000 hours repeated 10 times. It has to be constant improvement. So what I'm showing you is the same level of preparation that people like Kobe Bryant, Bill Belichick and John Wooden did. Two things are required. You need an edge, and you must master the battle for your mind and eliminate emotional limbic trading and learn how to become a probability thinker. Bigger time frames, smaller time frames, doesn't matter. Do whatever suits your personality. Several years ago, I saw David Lee Roth from Van Halen on Joe Rogan, and it struck me because he's talking about practicing 10 hours a day for 10 years. That's what David Lee Roth was talking about, okay? Diamond Dave. Yeah, he makes it look so easy, right? But the guy is really a trained classical musician. So what he was talking about is that the practice and the rehearsal are more important than the show. Now, David Lee Roth was responsible for all the lyrics in Van Halen. And I'm not talking about when Sammy Hagar was there. Okay, that's a different thing. When he was there, he kept a bank of ideas, storylines, phrases, concepts to fit any situation that when they were recording and they wanted to come up with something, Dave was right there with a new idea. And this is how we prepare for any market condition. This is why I'm showing you all this stuff. This is what could be coming against you. This is one of my older charts. Now look at this. You've got a consolidation. You've got 3465 is the high at 64 hours up. Now, let's just say for the moment that you bought this on the gap up, okay? You might mistake this for an island bottom. There's a gap and another gap. But whatever the case, you're also running up against resistance. So if you're long here, your only defense is knowing that you've got resistance level up here. You may not choose to exit this, but you had 1 hour to figure this out, that what was coming against you was a high at 34.65 in 64 hours. And I've shown you enough of these that this is actually the sell signal, and this is how you get out of the way of a dropping knife. Getting back to the retracement values, this is very important. We have a high on the, this is a weekly Forex chart, New Zealand US dollar. 0.8835 is the high, but it's a 34% retracement. And as I said, who not watching this video or being part of my posse is going to understand the significance of a 34% retracement? And a 34% retracement is not significant in and of it by itself, other than the fact that it is replicating the high at 88.35. So that's what you have to watch for. Another one of my favorite charts is if we take 0.0427 down, 0.0302 up, it's a 1.41 ratio of the bigger to the smaller, and it's 40 days. Now, since this is a daily calculation, what I've shown you to this point is we've looked at any number of 1 and 4 minute charts. The 4-minute chart is the intraday clock. And it's the exact same concepts that we're applying on a daily. And just because I'm looking at 1 and 4 minute charts and teaching you these tendencies, don't think, oh, I don't have to pay attention to this because I don't trade intraday charts. Everything that I've seen on the bigger time frames, with the exception of the Gann calendar, I first learned on the smaller time frames. So take the hint. Now here's a follow through of the prior chart. 141 ratio, 40 days up. Next sequence is a 41% retracement and yet another drop. Now this is like that ES chart I showed you at 61 ticks and 160 minutes. Here, the numbers are slightly different. You've got a 14-point drop, a 26-point rise. That's roughly a 54% retracement. And from here to here, it's 153 minutes, so it lines up perfectly. That's what replication's all about, gang. Now, in this case, on this Forex Weekly, 8.35 up, 83% retracement. This might be the move of the year, for all I know. Okay? But this is how you find it, and I've shown you this on smaller time frames. Campbell Soup works on stocks, 31 weeks, 1.31 inversion. Here's the calculations. Wheat, 35% retracement, then 36 days to the cliff where it falls off. Now this is the chart that really put me on the map with Bitcoin. This is when most of the people thought Bitcoin was going to take off and go to the stratosphere. But here's what we found. Right here, after the high at 69,000, we had a drop of 26,667 points, which was a 66% retracement of this leg, and it was in 166 days. This really should have taken off. They're right. And you know all the names. It's the usual suspects. But what ended up happening is you had this little bounce, and it fizzled. So I'm here to tell you, and I told people at the time, back then I was still writing for a weekly column at the Money Show, and we discussed this thing, that if you get a really good reading that jumps off the page like this one does, one of two things are going to happen. The higher probability is that it is just going to take off. But the lower probability, and this happens too, when these setups fail, when they fail, they will usually produce the big move going in the direction that you didn't anticipate. So everyone expected this to take off, but when it didn't, I said that Bitcoin was going to be in serious trouble. This is 42,000. As we know, what did Bitcoin get down to? Like 15,000? Whatever it was a big drop. And this is just a review. Peak 69,000, drops 26,667, 66%, 166 days, and it tanked an additional 28,873 points. And so now we're going to talk about the Gann calendar a little bit. I just did a video last week on the Gann calendar. Now you can go there and watch that video. This is going to be somewhat of a rehash summary, so I'm going to go through it a little bit quickly. But what I want you to realize is that this is a wheel that measures the daily vibration of the orbit of the Earth. Each day of the year has its own specific vibration. This is how turns in the market calibrate to orbit of the Earth. It's the most precise cycle tool for swing position and investors. And this is the Square 9 grid. And we're going to give you a practical application for it, because Gann really didn't do that, now did he? So this is the Dow in 2022. 65 number is important to the market. We'll get into that as well, because Gann basically said that 2/3, 66 is an important number, but this applies in many different ways. So what I should tell you is that this is the Dow, but the NASDAQ peaked in 2021 at 664 weeks, up from a low of 1265, and the same low in the S&P 500 was 666. You know that. And if you didn't know it, well, it's just this is just a rehash. And what I want to point out to you is that on the Gann calendar, from its high to this position over here was a 263-degree move, and this was a 64% retracement back to here, and this led the next leg down. Now in the Nasdaq, that June low. Oh, this is the Nasdaq. Sorry, I thought this was the Dow. This is the Nasdaq. This low is 144 days down off the high, and that 263 DG move at 64% turned out to be the 144 DG vibrational day of the year. Now, I have those calculations on, and they are available in a manual called Missing Link Volume 1. Okay, but everything does tidy and line up perfectly on the Gann calendar. And as I told you, 606, this is the bottom. 664 weeks from the 2009 bottom, and you already saw the 263 and 64% retracement. Now, this is another one of these Bitcoin situations and a practical application of how the Gann calendar works. From the low at 15,460 to this low, the difference in price is 4,108-degree difference. And in terms of the Gann calendar, it's 109 degrees. So I said at that point it was due to bounce. And you know what? It still hasn't stopped going up. Amgen, okay? May 15th low, that turns out to be the 54 DG vibrational day of the year. The next low on July 26th is the 123 DG vibrational day of the year. It's a 69-degree difference, and it's a 70% retracement. Think about that for a minute, gang. So now we're talking about how the orbit of the Earth influences the price action on charts that you like to engage in all the time. Problem is, you didn't know that. Now you do. This GW Pharmaceuticals, $6,170, 8,700, 135 degree. That's a 65 DG difference, and it's a 66% retracement back to here. Pretty amazing, isn't it? LUV, that's Southwest Airlines. 2.5 high, 316 degrees. Next high, 425, 78 degrees. And then at the secondary, then the bottom is a 78% retracement to the original low. That's how you do replication on a Gann calendar. Gildan Activewear. 54 DG difference. The intervening low right in between this, 826, 154 DG vibrational day of the year, high to high, 54 degrees. Okay, left side, as it says, 86 DG drop, 8.85 is the range down. Then it peaks on December 4th at the 253 day of the year. Finally, stops going down at a 52% retracement. So I'm putting together two very important concepts: replication, all of the retracement technology I've shown you, and the Gann calendar. All of this stuff works together. This is a 67 DG low on May 29th. The distance is 67 degrees, starts the next leg of the rally. This is the socks, gang. This is an important indicator for a major portion of tech. And this is how you can get ahead of the curve and get an early indication for rallies or sell-offs, because you don't want to be getting into it late. You want to get into it as early as you possibly can. And as I said, this requires a lot of practice and a lot of patience. You need to watch this stuff, work it on a simulator until you totally understand what happens and what is happening. But it's like anything else. Let me quickly tell you that Kobe Bryant story. Kobe Bryant, and I think the Mamba, from what I understand, is his Mamba technology is his version of deliberate practice. And what ended up happening is that there was one time where he was playing against Allen Iverson of the Philadelphia 76ers. And Iverson lit him up for something like 35 or 40 points. And my reference for this story is ESPN, the magazine. This is years ago. So Kobe was pissed. And he made a commitment. You know, the Lakers and the 76ers play twice a year. They weren't going to play for like another 3 or 4 months. So what Kobe did was he decided every night to watch film of Allen Iverson. He wasn't going to get beat by Iverson again. He watched the film. He studied all of Iverson's tendencies. And the next time they met, Kobe held him to under 20 points. So that's just one great story of deliberate practice and how the people who are truly committed to excellence are going to take that extra time to figure out how they can have an edge in any possible situation. Now, this one is 170 degrees in time on the Gann calendar, and it's a 68% retracement. Silver, 165 degrees, then it's a 63-degree move. And when we get to here, we look at the retracement technology. The retracement, the inverse of the retracement is 1.65. So you've got over here, 9/7's 165 DG day, 63-degree move, and the retracement value is 1.65. Now, this is one of my all-time favorite and most important charts that I can ever possibly show you. And it validates everything that I show you. So pay attention. Now, I first did this Great Depression chart. I'm a market historian as well, and I studied this chart for years. And it was probably about 10 years ago that I figured out that the 1929 crash was a 49% drop in 49 days. I found out a lot of other interesting things on this chart as well. For instance, that this is the rally, the happy days are here again rally, that people thought the bad days were over. As it turns out, this is 154 calendar days and 155 trading days off the top, and this led to the most horrible part of the bear market. What people thought was a light at the end of the tunnel was really an oncoming train. And it took me 10 years to figure this out. This stuff I knew. But what I didn't know until September 2023 is that we're talking about the last leg of a move, right? And we're also talking about the first leg of a move. And what the The crash leg shows how important the first leg of the move influences the entire move itself. You had 49% in 49 days. The bear market ended in 148.49 weeks. So roughly 148 weeks from the 1929 top, and that's where it ended. So what I'm showing you, all these little tendencies that I'm showing you manifested themselves on arguably the most important pattern of the 20th century. Now here's a practical application. First leg, this is a 1 minute, this is a 4 minute chart on the Dow futures. What we have here, 75-point drop, the low is 575. Same thing as the Great Depression crash, only giving you a modern version and application of how it applies to your life right now. First leg ends at 618. Last leg is 19 degrees on an intraday clock, 4 minute. First leg up is 577. Right here, here's your first leg, 577. Whole pattern, 77 degrees. So let's talk about some smart money concepts. And I got interested in this smart money concept stuff because I started seeing how certain things were happening on the charts that didn't exactly make sense to me. Everybody knows that their stops get run. I don't want to see your stops get run anymore. So that's why we're showing you this. And let me be clear that there is plenty of great smart money videos here, but none of them are teaching you price and time relationships. So why does it go down before it goes up? Because the smart money likes to buy at a discount. See, what we had here is the slow drift higher. All of these people were buying, but they put in their stop losses. And what ended up happening is that it came right down to what the smart money people will call the discount zone or the buy zone right there. And there's even some replication for us because right here the low is 53 and the whole pattern ends at 54 minutes after the hour. So we're combining the smart money concepts with the price and time square outs to give you greater precision. Now, why is this an imbalance? Because when you get very big bars, that's where you're looking at the imbalance. And what we have here is called a fair value gap, which is an area in between the wicks. And this is where the price action comes down to. Okay? And this is where the price action came down to also on a trend line. So the smart money, they're looking at trends and they're looking at buy and sell blocks. But if we look at it in terms of how I do things, what you're looking at is a 231 point drop in 32 15-minute bars. And as it turns out, it happens at the exact right place. So can you begin to appreciate the amount of discipline and patience that is required to not be on the wrong side of this and to be able to work with the edge that you have? I hope so. because we've been going for 49 minutes already, and I hope you're learning something. The mitigation imbalance, it serves as an advanced support level. Now, wick fills is a whole nother topic, but it's also a part of the SMC stuff and their toolbook. I didn't create this. I have learned it. Now, I've studied candlestick technology for years and years and years. And for what I've known from the great candlestick teachers, and they're excellent, let me just say they're excellent. They pay more attention to the real candle body, while the SMC people pay more attention to the size of the wick. And the important thing is that you understand that when you see a big wick, there's a pretty good chance that it could get filled. And you see here, you got this big wick right here, and they spend all this time filling it. So just take that to heart. Now this is what I created is a probability box. And I didn't invent this, okay? There's a guy by the name of Richie Nasso who was a market maker. He was a broker. He talks about how many multiple millions of shares of stocks passed through his company's hands through the years. And so they asked him, Humble Trader, the gal from her channel, asked him one day, so is it true that they try to run the stops? And Richie Nasso goes, every chance we get, they'll do it. Okay, it's just part of the game. And so the reason I put up a probability box is this is retracements, okay? But the probability box is the lower end of the probability box is called the discount zone. The upper end of the probability box is the premium zone. And the idea is not to sell in the discount zone and not to buy in the premium zone unless the calculations really support it, because you need to learn how to follow the rules of a discipline before you get to the place where you are advanced enough to understand that there is an exception to every rule. And I'm just showing you on this one that the Gann calendar caught every major move on the Dow. Let me show you. From the low of October 2022 to March 15th, was that 2023, I guess? Yeah, it's 153 calendar days. It's a 54% retracement. March 15th is the 354 DG vibrational day. And then the next low to end the next pullback is 154 trading days. Okay, so that's basically what I have. Now we have show specials, or should I say specials for watching this video. We have different manuals, which you can get straight through me. We have replication is the Holy Grail. How patterns terminate, we talked about that. Missing link volume 1's the Gann calendar. The secret pattern package, which is how the first leg of a move influences the whole thing. And the SMC manual, which is redefining support and resistance with Kairos SMC. Normally $250, because all the manuals are $50. You can get, all you have to do is mention that you saw this video and email me at lucaswaveman@gmail.com, and you can have all 5 for $217. Plus, I'll also send you a bonus, which is the Fast Start Guide, which is the best of the first 8 manuals that I've done. So you can do this in PayPal to lucaswaveman@gmail.com or email me and request an invoice. And if you want to take this to the next level for training, training is normally $987. Includes a call every other week on Skype, unlimited email support. You get manuals that are the equivalent of a complete NFL-sized playbook. And it talks about intraday swing position trading, investing, stocks, futures, commodities. As I said, lucaswaveman@gmail or request an invoice. Okay, so I want to thank you for coming. This is basically what I have for today, and I'm going to see you in the next video.